Good afternoon, everybody, and thanks for joining the session. I hope you're enjoying this conference. In today's fireside chat, we'll be exploring digital banking. We'll look at some of the evolving trends of what we've seen emerge through 2020 and what might, or some of them might, become permanent behaviours. Now, we've got a great lineup for you. Our speakers today are Mr. David Cunningham, the CEO of the Co-operative Bank. Welcome. Thanks for joining us, David.
Hi, everyone.
And we've also got Tom Coad, Head of Product from CoreLogic, who also used to be at the Co-operative Bank. Welcome, Tom.
Hi there, it's awesome to be here.
So just before we kick off, I'd just like to start by getting your views around, I suppose, 2020, and it was quite an interesting year for us. And a lot of your customers, I would presume, found themselves actually probably using more digital assets than maybe previously from the years before, especially by the fact that we obviously had our newfound friend turn up, Mr. COVID, and obviously forces into a situation where, especially things like money, we were no longer using or accepting checks and obviously cash, and we went into those sort of digital assets. So, David, I'll just start with you, but Tom, feel free to jump in. What was the experience like from your own point of view as a customer? And then what was it like, I suppose, for your organisation and how you dealt with that?
Yeah, sure. Well, as a customer, nothing really changed because I don't think I've carried cash for something like 30 years since FPOS started in New Zealand. And so, always try and have $5 or $10 tucked into the back of a mobile phone in case. But so nothing changed for me personally. And I actually think that was the case for most New Zealanders because we're a pretty tech savvy country. Almost everyone has a mobile phone. We've got customers in their 90s or late 90s using a mobile banking app. I remember I was at an annual general meeting where customer owned, so I was at our annual general meeting, and those sort of things tend to be attended by older customers who come in for the cup of tea or the free beer and cakes and so on. And I approached a customer who looked like they were in their 90s and says, "Oh, which branch do you, go to and belong to?" And he said, "Oh, I don't go, I just use the mobile app." Just about fell over because it wasn't what I was expecting. But, so whilst I personally just continued to bank the way I've always banked during lockdown, and, used a card if I ever went to the supermarket or whatever, I think for our customers, it was actually largely the same. So at the margin, a few more people use digital banking. But, for us as a business, we're strongly growing. And so our signups to digital banking during lockdown were actually lower than outside because we weren't driven by all the new signups we'd normally get. So, a bit faster sign up. A few customers used internet banking, mobile banking for the first time. But really, overall, New Zealand is so advanced in the use of technology that it didn't make a profound difference, in my opinion. Probably the one thing it changed most was the use of cash because almost no one used cash for that time. And so I'll perhaps talk about it a bit later. We changed how we approach cash in our branches as a result of lockdown. But yeah, so, more of the same, I suppose, with a few more people, but the trend was really firmly established.
Yeah, I would say it's probably much the same for me. I was at the Co-operative Bank for about half the lockdown, and then it kind of finished up towards the end of the year. But for me, it was it was using mobile apps, banking apps. I've got bank with a couple of different major banks in New Zealand and a couple of minor ones. It didn't really change for me how I approach things. I don't think I've ever really carried cash around. So kind of using banking apps and using contactless payment methods is just almost second nature. And I think for our CoreLogic customers, what we saw was people wanting to they still wanted the same information about their homes, about their properties, and instead of calling or instead of going into branches, banks were asking us how they could help do that more digitally. So we had a lot of interest for digital mortgage origination processes off the back of that.
I think both points you mentioned there, the sort of tech savvy, we are quite lucky that we are a nation of early adopters, and we've seen that with some of the sort of the technology products and solutions that obviously have gone to market. I think one of the things that got really exciting from my point of view is actually seeing new businesses actually pop up during COVID. And when I spoke to some of them actually that, they actually got to market more quickly because there was maybe a little bit of an easing of the way that things were getting done. So great to hear, obviously, that you both weren't necessarily impacted. And I think to your both points as well, that your customers were already pretty much there. It's interesting, I suppose, we talked a little bit around financial literacy, and now we talk about things like digital literacy. So I think it is important that we obviously keep our customers, on the journey with us. So a question there, just Tom, just pick you just for the moment, if that's all right, and then jump to you, David. How would you, as an organisation, then, how would you actually go about future-proofing the success, with digital, and capitalise actually on the fact that we've accelerated the use of it, certainly through the pandemic, but as mentioned even before?
I think what we need to do is make sure that we keep things simple and easy to use. I think that during the pandemic, there was some of the opportunities weren't there to go in person, but so people were using digital because they had to potentially, but in order to kind of future-proof that, we need to make sure that we continue to produce simple, easy-to-use technologies, right? I have a 2.5-year-old daughter, and if some of them are easy enough for her to use, and if it's almost if it's not toddler-proof, then it's probably not something we want to be rolling out to our customers.
Yeah. I mean, in that vein with young kids too, it's, my 10-year-old was sitting in the car. I was taking her to school, and my 8-year-old twins, one of them's got this watch. It's not an iWatch. It looks like one, but it only costs $15 that captures pedometers and all that sort of stuff. And she was busy setting it up. I had no idea what she was doing. And it was just classic how that stuff is so simple. But a lot of that, I think, comes to design as well. There was something I was listening to today that talked about the iPad and, why kids can navigate that so easily. It's because it's kept simple. There's no connectivity to a printer, for example, that would create all sorts of problems and so on. So, keeping it simple, keeping it sort of fit for purpose and that. And I think that point of simplicity is key. Like, another, I think it was a podcast I was listening to today, talked about MySpace. Don't know if you remember that, about 15 years ago, I think, and that was the way people communicated. And along came Facebook, and the commentator was saying something along the lines of, once they had Facebook, they looked at MySpace and said, oh my God, this is so complex, cluttered, and unusable. I'll ditch it. And so, you become irrelevant very quickly if you don't A, move with the times, and B, continue to invest. So I think that's the key theme is, you've got to continue to invest. And, a good example of that from a cooperative bank perspective is we launched our first mobile app about 2014. It was sort of leading edge at the time. We almost leapfrogged the marketplace by starting with a blank bit of paper, but we totally replaced it last year. So it was only sort of 5, maximum 6 years old and so on. And we rebuilt it from the ground up. So, that was not an expensive sort of thing to build for a bank. We do it pretty cheaply, but that was 5 or 6 years on. We were replacing something that was perfectly good, perfectly fit for purpose, but wasn't modern in the sense of technology and security and all those sort of things and ease of use. So, involved customers in that process. So I think the insight is, sort of fashion trends or tech trends change. And if you just sit on what you've got, you'll blooming quickly be left behind.
Yeah, I mean, I think that's the thing, isn't it? Make it simple. I mean, I remember giving a presentation to a room that were, shall I say, slightly elder, and I asked them, how tech savvy or tech adopted did they actually feel? And a lot of them said, oh no, absolutely not. But then when I sort of simplified the question, I said, okay, how many of you actually fly? So most of them put their hand up. Okay, so talk me through your journey. So there they were, obviously booking in on the app, arrive at the lounge, order the coffee. And all of a sudden the penny started to drop. They're like, actually, maybe we are a little bit more tech adopted or tech savvy than we actually thought. And I think that's that easy, simple transition into that helps that sort of that early adoption, which is great. So, I mean, from a point of view around, customers and the, dare I say, the demands of your customers, I mean, what sort of feedback have they given you around what they're expecting from their sort of their digital experience? I mean, has that changed pre or post or during the pandemic? Be interesting to just get your views.
I think it's probably accelerated what customers have been asking for, but I don't know if it's actually changed inherently the overall ask, which is I want a Netflix or Spotify experience from every kind of digital touch point I have. I think that, with more turning to digital during COVID, I think we saw that speed up, but I don't think that's changed necessarily from, a couple of years before. I think we've had the tech giants who've been leading the way internationally, and I think everyone's, trying to keep up and understanding that they've got some of the best experiences, and that those experiences are what's making those companies successful, not necessarily, data or, the technology that's used.
Yeah, look, for me, I think in banking, because most things people do on the mobile app or internet banking are the really simple stuff, pay a bill, set up an AP, check my balances and so on, look at the home loan details and interest rates, what's my KiwiSaver sort of doing. And I think banks have generally got that pretty good globally, and certainly in Australasia and particularly New Zealand. And so I think the expectations of customers are not necessarily changing a lot, they're already in a good place. But from my perspective, from a bank, I think we failed quite poorly actually from a complex transaction perspective. So think applying for a loan, for example, with the Consumer Contracts and Credit Finance Act, there's a whole lot of information we've got to gather. And so we go about gathering that by asking the customer to do a whole lot of stuff for us. So we ask them to prove their income to us. We ask them to provide a bank statement so as we can look at them and make sure they can afford it. And yet all of that information is available, right? And yet we ask the customer to do that. And then to boot, we then ask our staff to get that information and analyze it and do stuff with it. And, at our place, we're not fully automated, we're working on it, but, our customers, staff get highlighters out and go through looking for, things like, gambling sort of type situations that are evident from bank statements and so on. And all of that is available information that can be handled by computers. And as an industry, we don't do a great job of that. And things like open banking or open data more particularly, where a customer enables the data to be shared with whoever they want, in this case, say us as a bank, to support a credit submission, enables that simplicity, that removal of friction for customers. And so I think because it's an infrequent transaction, customers put up with what is a pretty shitty experience, to be quite honest, and most banks are in that zone. And the fault lies with the industry for not sharing data, making it easy to share data, and banks and the like to build those processes. So I think, and some of that's sort of, we haven't got a universal sort of approach to open banking in New Zealand, and consumer data rights is actually probably an excuse to hold things back until the government legislation tells us what to do. So for me, it's sort of like improving those customer and staff experiences to remove friction. That's the big opportunity. And I'm not sure if customers expect that because they do it infrequently, but when they do, it should be a beautiful, simple, frictionless experience. And I think banks have got a long way to go in many of those sort of areas.
Yeah, I think you bring up some personal issues there, David. I've gone through that exact experience literally only in the last few months, where all of that information is residing with my bank, and all of the questions and the verification, and you just sit there pulling your hair out. I really like Tom's example there, actually, Netflix. I've used a sort of a similar thing where in the olden days, you'd sort of sit with the family on a Monday night, waiting for your program to come on, only to be left with a little bit of a cliffhanger. And then you'd have to wait till the following Monday. Well, obviously Netflix and other devices and things have come along and changed that. Banking, financial services is just the same. It's when you want, it's not device dependent either. And I think we are seeing an evolution, but I think we could be doing more. Question, and I suppose for you, around investment. Banks sometimes do obviously get criticised, but we shouldn't really forget, actually, you're complex machines. They really are, and some have been around for quite considerable time, bolted on a number of new platforms and systems. And I think we are getting better at being able to glean that data out to then actually do something with it. And obviously you have people like Tom who obviously help that. But do you think over the period of time, historically, and do you think going forward, we're investing enough in this particular space to actually then deliver what our customers want?
Yeah, hey, from a bank's perspective, there's always different asks on your capital expenditure. I mean, at Co-op, I guess when we became a registered bank 10 years ago, we really started to invest big time. So we were investing over 50% of our profit back into projects. Some of them were physical, like, we opened small branches. Some of them were computer hardware, which we're not really buying any more of that now. We're moving everything to the cloud, and largely we'll complete that journey in the next year or two. But investing in customer experience and staff experience has been a big part of what we invest. But there's always not just the stuff you'd like to do, there's the stuff you have to do, which is, there's a lot of regulatory stuff. So classic example is the triple CFA, the Consumer Contracts and Credit Finance Act. So some new legislative change came in that was targeted at loan sharks and people charging 400% interest rates. Guess who's spending, literally as an industry, tens of millions of dollars complying with that legislation that was all about 400% interest rates? It's the banks. And I was looking at our project internally. There are 32 people in Co-op in different ways working on that project to be compliant on the 1st of October, I think it is. 32 people. It's not all of their role. It's a small part of some of their roles, a lot more of other people's, but we've only got 330 people. So that's 10% of our staff working on compliance stuff. And so, my point is that you want to invest in the customer and staff-facing stuff to make their lives easier and deliver great experiences, but there's always sort of a regulatory overhang that demands some of your valuable resource. And, you can't avoid that. In some ways, that's the regulatory moat that keeps aspiring people out of banking. So in some ways, I always sort of say, celebrate it, don't commiserate about it, but it is an ask on your resources. But, that investment should always be fairly substantial. I think we're seeing all the banks and financial services businesses investing in that space and, opening up through, using APIs and so on. So even if you've got legacy technology, the connectivity into that is really sound and really open over time as well.
Yeah, and I think there's always going to be people who'd like you to invest more. I think where you invest is really important. I think so. Co-op looking at relaunching their banking app, understanding that's got a huge impact for their customers, and so spending the money there, obviously, a great move. I think that in Australia, some of the major banks saying, actually, we don't want to try and invest in upgrading our core systems. Let's build from the ground up, because that's going to be a better use of that money. So it's not just, should we invest more, but it's how should we invest it, and how do we keep up with demands that say, a new platform is out of date 3 years after it's built. So how do you future-proof new, as well as understanding that in a couple of years it's going to be potentially out of date and there'll be something new, and how do we use AI that no one really understands properly? We talk about it, it's almost like a buzzword. How do we actually use that to keep up with customer demands and internal demands, regulatory pressures?
Yeah, but I think that it also raises a really interesting trend that we've seen a lot more of, certainly last year and certainly at the beginning of this year as well, is partnering. So I think to your point, Tom, it's there's not necessarily the need now to spend, I don't know, $500 million or $1 billion in revisiting your legacy systems. You can actually also partner with smaller, more agile tech companies and ultimately actually deliver a much better customer outcome. I mean, are you both seeing that from both sides of the financial services? Is that something, David, that obviously the Co-op is embracing?
Yeah. Well, look, when we did our mobile app in the first place, we'd had an internet banking that was year 2000. We had no mobile app in 2013, and we partnered with Alfero, which is a small Wellington, or at that time, smallish Wellington software house, and that was amazing because we delivered a lot quickly. We've subsequently, in the last couple of years, brought that stuff into house, but that was a great relationship when we didn't have the skills in the early days in the front-end development. I think it's a really interesting sort of space in terms of fintechs. You're sort of fintech NZ, James, but I sort of look at fintechs and go, I think it's really, really hard place to be, because the challenge with any business is to get customers, and in financial services, banks have a hell of a lot of customers, and it's actually a surprisingly hard business to make money in financial services. So look at Monzo in the UK, so a neobank, startup digital-only bank. Last I looked at their annual report, they had 3 million customers. So by comparison, Co-op Banks has got 170,000. Their balance sheet is about £1.5 billion, which is the same size as Co-op's balance sheet in New Zealand dollars. And they lost £123 million last year, up from a loss of 77 the year before, and a smaller number the year before that. But they've consistently made losses, whereas Co-op banks, made 25 million last year pre-tax, sort of thing. And so it illustrates that it's not just about customers; how you monetize that customer relationship after you've won the customer is the challenge. And I reckon for fintechs, the big opportunity is to partner with banks and financial services businesses, as opposed to say, I've got a proposition, customers are going to flock to it, because you can sort of say, look, all I need is 1% market share. But trust me, getting 1% market share is unbelievably difficult unless something is so new and so unique. And very, very few things are, and banking's a low interest sort of category. So the opportunity to partner more with fintechs, I think, is the real opportunity for both fintechs and banks, because banks don't have brilliant ideas and aren't, agile in the way that startup businesses are, but equally they do have that customer base. And if you've got a platform that can integrate via APIs with the ideas provided by fintechs, you've sort of got a marriage made in heaven. So, and then there's probably a subscription model or something like that. So I think there's, that actually is probably one of the big futures for banking innovation, is not to try and innovate yourself, but to leverage others in innovation, because, we're probably less entrepreneurs, we're more risk managers and so on at banks, and customer experience managers.
Yeah, I absolutely agree. I think that, CoreLogic, we'd see ourselves as a partner to major banks in New Zealand, but at the same time, we know that we can't specialize in absolutely everything. So we actively partner where we know there are capabilities that will help us, to grow and support our customers. I think one of the most recent examples is, partnering with Ambiental to provide flood data for the entirety of New Zealand, that last week we were able to send out to the banks to say, these are your customers that potentially were impacted with the flooding. And, we can give you addresses, we can give you the actual data, and you can go and contact them rather than them needing to contact you. But so I don't think it's just the large financial institutions or even the smaller financial institutions that need to be partnering. I think it's the fintechs partnering with each other to help produce combined solutions that are serving customers.
Yeah, that's a great example of an industry-wide solution, Tom, isn't it, in terms of the work CoreLogic's done in that space? Because, individually, why would the banks, 8 of us in the retail market do the same thing 8 times, sort of thing? And again, in the fintech space, you've got the likes of Coad, which measures your carbon, sort of based on your bank account data, and other entities like that. So there's some good examples that are multi-provider sort of solutions, and so it's about finding, the good ideas will ripple to the top anyway. That's what I'd observe, and I think banks are increasingly got flexibility in their platforms to integrate. So there's a bright future, I'd sort of say, in that partnering space.
Yeah, I totally agree. I think you mentioned the word friction there earlier. I think that a number of years ago there was that sort of friction between large organizations and the techs, because it's like, you've got all the customers, but you've got legacy systems, and we've got this new shiny thing over here, and we'll just build it because we've got the the investment and the resource, whereas you can obviously move maybe more quickly. But then they sort of both found their feet, and actually the relationship started to blossom, and it's like, well, actually, if we work together, actually we'll deliver a far better outcome for both parties involved. And I think we're seeing much more of that, certainly in the last sort of 18 months. And, it's also about how you engage. Having worked nearly 2 decades in financial services, working in a bank is quite complicated. It's, it's not just turn up at the door and, open your briefcase and present the big shiny thing and, we buy it and away we go the following day. It does take a little bit longer. So as part of our role, we're trying to help educate about the right type of approach, when to approach, how to approach, but being very mindful actually that there are some layers that you would need to go through before that partnership actually then came to market. But yeah, you mentioned things like Coad. There's lots of examples now in New Zealand where we're really seeing, great partnerships actually solving, big chunky problems. If we sort of just dive a little bit narrower just for the moment across financial services, have you seen any particular trends in any particular part of the financial services sector? So I don't know, we talked a little bit earlier around like contactless payments. Have you seen more things happening in payments, something happening in insurance? Is there any particular thing that sort of jumps out at you that you've spotted? Tom or David?
I'll let you go, David.
Financial services, and payments has changed a hell of a lot in the last few years. I mean, it's sort of been interesting that things like mobile wallets, so on the phone as opposed to the card that sort of does the same thing, but a brand sharing there. It's sort of a steady progress sort of thing. It's been interesting how, like, we don't currently offer mobile payments through the mobile phone and that, and it hasn't been something that we're getting the doors sort of banged down sort of about. So yeah, it's coming, but it's really been tap that's been the big change rather than sort of swipe and so on. And I think with the interchange changes that are coming with the regulation of interchange sort of rates, that will probably support the acceleration. But from what I understand, something like half of all payments in our tap transactions, whereas go back 5 years, it was 5% or less, probably zero actually in New Zealand, and I think the same is true in Australia too. So it's certainly something that in New Zealand, Australia, globally has been a fundamental change. And it's almost like holding, I think COVID sort of accelerated that too, because holding onto your card rather than passing your card to someone else or putting it in a machine and pressing buttons and so on, and the fact that the banks all lifted the payment amount to $200 before you had to sort of touch the thing. It's like something accelerates something that was already happening, that was accelerated by COVID, that banks facilitated even more by changing transaction limits and so on. And you get to hold on to your card so you don't leave it in the machine like I occasionally do, and have someone say, "I thought you were a banker," and yet you're leaving your card in the machine. That's convenience for the customer. So that's sort of a big change in payments. I think the other thing is in the open payment space. So we've seen online FPOS, for example, start to get a little bit of traction. I think most of the banks, or sort of several of the big banks now, along with Co-op, are offering online FPOS for customers, which is a really elegant solution. And it's, I guess, a different way of paying through using the card schemes and so on. So you think about the likes of Afterpay and those guys, they're still using a card scheme card to make the payment and so on. So online FPOS and open payments or open banking, the payments part of that will enable better solutions. So as I can walk around the shop and point my phone or QR code or something, put my phone out a QR code and I've paid for it and I can just pick up and walk out. So I think, that removal or reduction of friction in the buying process, both online and physically in a shop, will change, So yeah, in fact, there is a fair bit of change, but interestingly, it hasn't all been orientated around the mobile phone for payment, because, tapping my phone or tapping the card isn't too much different.
Tom?
Yeah, I was going to say the using QR codes for payments are not necessarily CoreLogic's wheelhouse as much, but if I could speculate, I can see that becoming a far more popular payment method, in New Zealand and Australia. I think, in China especially, it's massively popular, and that's because, as we touched on earlier, people have access to mobile phones. It's really, really easy to hold up your phone and scan the barcode. And then what we've seen during COVID is that everywhere you go, you walk in, you scan your phone first thing. So I'm interested to see where that's going. I think open banking, open payments is only going to help drive that and accelerate that.
Yeah, I think it's a really good insight, Tom, in terms of we're now in New Zealand used to QR codes. Ask people 18 months ago, what's a QR code? It would have drawn a blank from most New Zealanders. Now we'd probably all go, yep, know what that is. So I hadn't really thought about that, but that's a significant advancement in how things can be built, actually, because of COVID.
Yeah, and I think your point, David, as well. I mean, I was really impressed, actually, just at the sort of the pace that sort of the financial services sector actually moved when they actually did raise the limit. And I mean, thinking about it logically, it made absolutely perfect sense, because you actually allowed then organisations to remain at sort of that distance, but actually still operate as well. I think it'll be interesting to see where it goes. I suppose I want to, what is the next big thing that we're going to see in an 18 months time from now? Are we then going to go, oh, well, it's just something we just use now. It's, we don't even actually have to think about it. We've seen certain organizations, obviously, we've moved to watch, glasses and things of that nature. I mean, Tom, do you want to speculate a little bit about where you actually think the future might be, what it might look like?
I'm very interested to see where we go with digital identity and what that's going to mean, probably broadly past financial services. But if I want to prove who I am, it's my driver's license. But my driver's license has a whole bunch of information that doesn't, more than just proving how old I am. So very, very interested to see how we progress forward with that, and how the consumer data right in general broadens how we access data and how customers can access data. And I think we don't really even understand how that could be used to drive growth and innovation, because we haven't really had access to it. And I think for a business like CoreLogic, we would love to be able to end to end help someone buy a home, but we could do that if we knew exactly who they were, how they were banking. We could connect the banks end to end. Like that's kind of where we're starting to think, and we're very interested in some of the outputs and outcomes of those papers from MB.
I think biometrics have got a much bigger role to play going forward, and it's quite big in China, eh? But I was watching something with Amazon Go, the grocery shops in US, I think, that have been up and running for a little while, and the description of the friction that we create was really interesting, and how you can remove that, and biometrics is the solution. So the story sort of goes, you used to walk into the Amazon Go store, get your phone out, unlock it, tap it on the against the reader, and then enter your PIN or whatever it was on your phone, or your fingerprint or something, and then you can go and shop and walk out with the stuff. They said too much friction, and so now you walk in, put your hand on the reader, it knows who you are instantly, and away you go shop and so on. So it took a set of 3 steps that were pretty bloody simple and turned it into one unbelievably simple one using biometrics. And I guess play that forward, why would you even need the fingerprint or handprint? The biometrics, facial recognition, all that sort of thing does that job for you. So it's sort of quite bizarre. You walk into a shop and walk out with whatever you want, and it knows exactly what you bought and who you are and which bank account to debit. So, it just biometrics re-engineers what's possible, and also creates a more secure world, I think, for us too.
Yeah, and I think that goes back to your point, Tom, as well, around AI. I think we're still scratching the surface to some extent. I think there's probably a lot of experimentation going on behind closed doors all over the world. But I think actually in a sort of like an adopted world, I think there's definitely still more scope for it. And I think back to your point as well, David, the whole biometric piece. I mean, I still come in, we came from the UK and I had to sell our property over there, and all of the information they wanted by email. And I'm like, so I'm going to send you copies of my passport, copies of my bills, copies of my driver's license. I'm not really sure about this. So I think there's definitely other ways that we can be doing that. But just before we wrap up then, I mean, Tom, you've already done it. David, any other thoughts about what you think the evolution of the financial services sector might look like in, I don't know, 5 years' time, let's say?
Well, 5 years' time. Look, I think that there's a huge role for people still in financial services. I think the neobanks globally haven't really demonstrated that they can make good money unless they're quite a narrow scope, like TransferWise, which is now Wise, for example. But in terms of a full service financial services organisation, I think the role for people is still really important. But the role of technology to remove all the friction and the senseless stuff that we ask our staff or our customers to do is where the evolution will sort of take place. So people will still be important, but they'll be adding value through the human interaction rather than processing information and asking customers to provide information. So I think it's that removal of friction. So as the value add from people is truly value adding rather than, process sort of stuff. So, for me, that's where you'll see the big changes. People will still matter. Frontline places for us to meet people will matter. Video might be used a bit more, and phone and email and things like that, but it's the human piece that will be far more efficient because we use technology far more effectively.
Tom, final thoughts?
I would just absolutely echo that. I think that people are always going to be totally relevant, and I think when you complain about something, you want to talk to a person. You don't want to talk to a chatbot, and those people actually solve that problem for you. So I think that's a very, very simple way of describing it is how I think that'll progress forward.
Yeah, I think that's a great way to sort of finish the session. I mean, if we reflect back on a few years ago when Game of Thrones was on TV, everybody was like, in a financial services context, it was like, AI is coming, Jon Snow, be mindful. But the reality is, when you look at all of the research, actually, to your point, David, the technology is actually creating jobs. It's not actually taking them away. It's removing the friction. And ultimately, from a staff or an employee's perspective and then the customer perspective, both actually are getting much more out of that conversation than possibly they were previously.
Yeah, so I saw a great, just got to throw this in. Great thing I heard the other day, that if you think technology is going to take jobs away, then ask the doorman or the lift operator what they think.
Yes, that's a good one. I like that one. David, Tom, I really appreciate you taking the time to join us today on our fireside chat, talking about digitizing and the evolution of banking and financial services. Some great insights and some views about what we are seeing in our sector and what obviously the future might bring. So thanks very much. Enjoy the rest of your day, and we'll see you on the next session. Thanks very much.